Today we see a relatively weak market losing momentum and about to trigger a dangerous bearish reversal pattern that could reverse the uptrend, causing the SPY and the QQQ to enter a downtrend for the next few weeks, to say the least, alright? So let us see what to expect from the market and think about the next strategies to follow, because it doesn't matter whether the market is rising or falling, only those who don't work with a clear strategy end up worrying about it, alright? So welcome to the Finance Hydra channel. My name is Nathan, and here on this channel we study the market together every single day, always from the perspective of technical analysis to guide us without guesswork or assumptions. Here our focus is solely on technical analysis and strategy. Welcome to another daily analysis. Now, as we can see here, SPY is not reacting. We are trading very close to a very dangerous inflection point, closing below the 586, which is technically the neckline of this gigantic head and shoulders chart pattern, one of the most reliable bearish reversal chart structures known in technical analysis. By triggering this head and shoulders, our next technical target is $563 down here, alright? We have a secondary support level around the 576, closing this open gap, but 563, 564 is a more interesting target to work with, especially because on the weekly chart is the previous top level, as we can see here, alright? And guys, remember, previous top levels are going to work as future support levels following the principle of polarity in technical analysis. Now, if you ask me, but Nathan, we are closing below the 586, so we are turning really bearish right now. From a technical point of view, yes, we are already bearish because we are still below the 21-day EMA, the exponential moving average on the daily chart, but since today we see a relatively big wick, a shadow, a very nice shadow below today's the candlestick's body over here. Okay, we are still not that bearish. What's more, we are still above the 21 weekly moving average. So if you ask me, there is still time for the SPY to make a miraculous reaction, maybe tomorrow, maybe next week, avoiding this head and shoulders chart pattern, alright? Not all hope is lost over here. We still have time. However, I'm not that optimistic because there are many reasons for us to remain skeptical. First and most important of all, we have yet to see a crystal clear bottom signal above the 586 area. All right, and guys, remember, it is an area. All right, it is not a very specific magical number. Oh, closing below 586.12, we are gonna technically trigger this head and shoulders, and our next technical target is 564. No, it is not. It is more like an area. All right, we could react around this area. Yes, we could, but the major problem is that we don't see any meaningful bottom signal yet. There is not a single technical evidence suggesting that SPY is going to react or it is going to bounce from here to seek higher levels, maybe the all-time high level again. No, there is not a single bullish reaction yet. If tomorrow we see one, if next week we see a very nice bottom signal around this support level, okay, fantastic. SPY will most likely seek its all-time high again, avoiding this head and shoulders chart pattern. But for now, there are no reasons for us to be optimistic. All right, we still have to be very careful in this scenario. If we see a bearish reaction again, 564, 563 is going to be our next major support level. For now, there is no clear bottom signal, so we gotta work with a crystal clear strategy that suits this weak momentum. Regarding tech stocks, the QQQ ETF is on the verge of triggering a bearish pivot point by losing the $509.29. That's the technical trigger of a crystal clear bearish pivot point, a lower high, lower low. Guys, remember, uptrends are made of higher highs, higher lows, all right? Downtrends are made of lower highs, lower lows. By materializing a crystal clear lower high, lower low, we are going to frustrate, to reverse this bullish momentum, technically turning bearish over the next few weeks. In this case, by triggering this bearish pivot point, the QQQ could easily retest the lower line of its ascending channel. We are still in an uptrend on the weekly chart, all right? Just like the SPY. Okay, the SPY is still above the 21 weekly moving average, so we are still in bullish territory, long-term speaking, and this is why we still could react on SPY and avoid this head and shoulders, all right? Because we are still above the moving average on the weekly chart, and the SPY is all, and I'm so sorry, and the QQQ is also above its own 21 weekly moving average, and it is still above the $500 area, which was the previous top level over here from July last year, all right, July 2024. So we see a double support level in this area. Only by losing this double support level and by triggering this bearish pivot point on the daily chart, we could see a sharper correction ahead, possibly losing the $500, retesting the bottom line of this ascending channel. Okay, the lower support level of this ascending channel. So far, we are still maintaining the price above critical support levels, but again, since we don't see any crystal clear meaningful bullish reaction, the situation is very dangerous. Oh, but Nathan, you may ask, but Nathan, we see a long shadow below the candlestick's body today, all right, closing above the 509. So we failed in triggering this bearish pivot point. Yes, you are correct, all right, you are totally right, but this alone is not a meaningful, amazing, incredible bottom signal, all right? It is not a this alone is not a technical reason to buy, okay? We don't see any meaningful, convincing bottom signal yet. Just another bearish reaction. We lost the previous candle's low. We briefly lost this bearish pivot point over here, but we are closing above it, so we are not looking that good. It is not that strong, but at least it is not triggering this bearish pivot point either. So again, we could react, but we gotta see more technical evidence confirming a bottom signal in this area for both the SPY and the QQQ. As long as we don't see that, the indices are not going to trigger a buy signal, all right? I'm so sorry to be the one who's telling you guys this. And how this is going to affect our stocks? Well, Nvidia is not that affected because it is going up roughly 3% today. We are rejecting the previous bearish candlestick pattern. We are closing above the 21-day EMA, and again, above the previous candle's high as well. So if you ask me, we are more like in a short-term sideways congestion over here, but we are still trying to maintain the bullish bias. We are rejecting, Nvidia is working very hard to reject the idea of a head and shoulders chart pattern over here on the daily chart as well, right? Because we did react above the 130s area. This is very good. If you want to see a bullish reaction on the SPY, for instance, you gotta see this going on, okay? A bullish reaction as soon as possible around our support levels, rejecting the idea of a head and shoulders. This is what you want to see on SPY in the next few days, in the next few weeks, in order to avoid a sharper correction. For now, Nvidia is trying to maintain the bullish bias, but it is not looking that strong. If you ask me, it has decent chances of retesting the all-time high level again, but if we see a crystal clear technical top signal or a bearish reversal chart structure on the daily chart in this area, we could see Nvidia retesting the 130s again, alright? And that would be not good, because by triggering this head and shoulders chart pattern on the daily chart, Nvidia would also automatically lose its 21-week EMA, the weekly moving average on the weekly chart. By losing these key points, all of these support levels, Nvidia could easily correct to much lower levels. Our next technical target would be the 115. Okay, so this is our most important inflection point for Nvidia, alright? It all depends on how it is going to react from here. Now, a very interesting key point to watch on Nvidia is the previous top level, because by breaking the 141.90, Nvidia is going to technically trigger a higher high, higher low, a bullish pivot point, and this will only reinforce, this is going to reinforce the idea of another rally to the all-time high area near the 150, okay? So 141.90, that's the most important resistance level for you who's bullish on Nvidia. This is the most important trigger point of a bullish reversal chart structure, all right? If you are bearish, okay, the 130s is the key point. You want to see Nvidia losing. It all depends on the strategy you are following, all right? And guys, of course, you can learn my personal strategy and get access to the stocks that are on my radar, as well as the various trading signals and strategies that I share with you every single day, just by becoming a member of our educational project, the 5% project. Yes, there I teach you how to trade professionally, and I share real strategies with clear signals, with entry points, showing you where to buy, where to sell, where to place stop loss, etc. There is even a complete ebook on technical analysis teaching you the main patterns we trade, and you can download it for free. All right, absolutely free. You can join the 5% project for free for 7 days. We have a very good track record. Our performance is very solid and consistent. So see if our strategy suits your style. It is free to try. Then after 7 days, you decide whether you want to join our community of traders or not. Just take a look at my website. The link is in this video's description. All right, deal? Now, regarding Tesla, as we can see here, Tesla is rejecting the bullish case. We did trigger a shooting star candlestick pattern over here. We are triggering this shooting star candlestick pattern, suggesting a sharper correction to the weekly moving average, as we can see here on this weekly chart. On the daily chart, Tesla triggered this bearish pivot point. If you have a more bearish outlook, this is what you want to see happening on the QQQ. All right, a crystal clear bearish pivot point getting triggered. By doing so, we are going to technically reverse the upward trend, all right? And we're gonna seek our next support levels. Tesla is triggering this bearish pivot point. It is losing the 414, the previous top level from November 2021, a previous support level, as we can see here on the daily chart in December 20, December 23, and we are also losing the 21-day EMA. So this multiple support level on the daily chart, and we also see a top level on the weekly chart as well, a top signal on the weekly chart as well. All of these signals only reinforce the idea that yes, Tesla is turning bearish medium-term wise, seeking our next technical support levels. Again, medium-term wise on the daily chart, our next technical stop is $358. That's where I see Tesla next, all right? Of course, on the weekly chart, we have more downside because we could retest the weekly moving average, but 358, all right? That's our first technical target. Let's start with $358 for now, okay? Now, if we see a miraculous, meaningful bullish reaction above this key point, okay, maybe Tesla will be a buy again according to my standards, all right, following my strategy. I will always share my strategies on our 5% project, all right, to the 5% project's members, but for now, I don't see any meaningful bottom signal, any meaningful buy signal for now. Only an opportunity to sell or to short, and if we see any top signal below the $400, we could see just another short signal. Okay, so let's pay attention to these most important key points on Tesla stock for now. All right, again, Nathan, I want to learn the top signals you use, the bottom signals you use. Download my ebook on technical analysis. It is right there on our Telegram channel. Link is in this video's description. All right, now AMD this one is still very bearish since October 2024, making lower highs, lower lows, not a single bullish reaction, not a single bullish chart structure. We are just correcting, we are just dropping. As long as we see AMD doing this, it is not going to reverse, all right? But Nathan, we are very close to this support area near the 120s, right? The previous support level from August last year. Yes, we are, but last week we saw a bullish Harami candlestick pattern, which is a quite interesting bullish candlestick pattern, all right? According to Thomas Bukowski's studies, this pattern reverses the trend roughly 56% of the time. It is near random, all right? It is not that reliable, but in my humble experience, when we see this happening near a support level, the odds of a bullish reaction increases dramatically, all right? But what's the problem? The problem is that this Harami wasn't triggered. In order for AMD to trigger this Harami, we gotta break and close above last week's high. So far, in fact, we are doing the inverse. We are losing last week's low. So it is not necessarily a bottom signal yet. Therefore, we should be very careful here on AMD, all right? Because there is not a single bullish chart structure suggesting that it could reverse, it could bounce, it could recover from here. Okay, we are still below many resistance levels, and we failed in triggering a bottom signal on the weekly chart. All right, so we gotta be very careful, okay? And regarding Palantir, we also gotta be very careful because we are now near a support level, near the 21-day EMA. The most important support level to me, at least in my humble opinion, is the $71. Because by losing the $71, Palantir will lose the previous support level after making a false breakout of the previous top level. That's going to be very problematic and very annoying for Palantir's investors. Maybe we could see a sell-off in sequence. Right now, we are still above the $71. So okay. Great, we are still above it. If we lose this key point, we could see a sharper correction to the 21 weekly moving average, and that would represent a drop of, I don't know, nearly 20%, right? So it is going to be quite annoying. But if you ask me, guys, Palantir, SPY, QQQ, they are all still long-term wise on their weekly charts, they are still bullish. So if we see any bullish reaction above their weekly moving average, even considering that Palantir could correct more than 20% over here, it could be just another buying opportunity. Because again, remember, buy near support levels. Don't buy near resistance levels. Don't buy far away from our support levels, because when we buy near a support level, the risk reward ratio is optimized, all right? And it all depends on our good risk management, all right? On the risk reward ratio. If it is making sense, great. You can buy, you can sell, you can trade. If it is not making sense, guys, don't trade, all right? And this is a common mistake that I see around. How many times I see people saying, Nathan, I bought Palantir around $80. Now it is dropping. Nathan, I bought Tesla around $440 and $70. Now I see Tesla dropping. Guys, you bought far away from our support levels. You should buy near our support level so you can optimize your entry points, so you can have a better risk management. So the overall risk reward ratio of your portfolio is optimized. All right. In my personal case over here, my average risk reward ratio is around 2, meaning for every single dollar I risk, I make $2. Then my wins will outweigh my losses, and all the statistics on my trading style is again on my website. Link is in the video's description, all right? So, and this is how you trade professionally. You use TA, you use technical analysis in conjunction with other tools. Then and only then you can find the so desirable long-term consistency, all right? So that's what I'm saying right here, right now. If we see a sharper correction on Palantir, on Tesla, okay, maybe these stocks are going to be very good buying opportunity, will offer us very good buying opportunities if we see a meaningful bullish reaction near their support levels. For now, there is none. There's a time to go long, there's a time to go short, there's a time to go fishing. This is Jess Livermore, all right? One of the greatest traders that ever lived. A classic quote from Livermore, all right? And right now, I agree, okay? Maybe it is just a time for us to go fishing, all right? I see few opportunities. I still see some opportunities, but they are more scarce in a time like this, because we see a lot of indefinition in the market. So it is too uncertain. So we gotta see more definition, we gotta see better reaction, and then we'll see how to proceed, all right? Regarding Apple, guys, Apple is losing the 21-day EMA. It is making a top signal on the weekly chart. If you ask me, 237 is our next technical stop. What if we lose 237? 21 weekly moving average is going to be our next stop. Nathan, in the worst case scenario, what if we lose the weekly moving average? $221 is going to be our next stop, right? And then I don't know. All right, for now, let's focus on the 237. Okay, if we see a meaningful bullish reaction above 237, fantastic. Maybe it is going to be another buy. I gave you guys a call to buy Apple here near this bottom signal to the 5% projects members, but right now it is not a buy. Okay, we should wait for a better, clearer opportunity. And regarding Broadcom, this one is just moving sideways in a sideways congestion. We are far away from the moving average. We are far away from the 211, our next technical support level. On the weekly chart, we see a possible shooting star, just like Tesla, right? But there is no technical top signal triggered yet. We don't see any meaningful bearish reversal chart structure. So as long as Broadcom stays above the moving average on the daily chart, and the most important of all, above the 211 support line, it is not going to turn bearish. It will maintain the bullish bias. Any pullback to these support levels could be just another buying opportunity. All right, my dear friends, if you are still watching this video and are not a subscriber, consider subscribing, because we are here every single day talking about many stocks. You are watching this video for more than 24 minutes. Dude, this channel is for you. All right, it is just for you because you like to study the market. You are a focused person, right? You like to study, you like to understand the movements from a technical point of view. Therefore, we are here for you. Subscribe and click the like button to support me as well. Thank you for your audience. Stay safe. See you guys tomorrow.